This is a Stock Trading Reality Podcast, episode 99.
And basically, I grew a small account by the thousands very quickly, just off of luck and these quick trades. And I just thought I had everything figured out.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. He thinks the number of trading monitors being used are vastly overrated. Clay Trader.
I really do, and that's one of the biggest questions I get is, Clay, how many monitors do I need? I saw this one guy and he's got like 8 of them, and and a lot of questions about monitors. And to be honest, they're pretty overrated. I will say this, at least two, as not even from a trading perspective, but just from a workflow perspective, you can be much more efficient with 2 monitors. But please, by no means do you think that you absolutely have to have 3, 4, 5 monitors in order to become a trader or be good at trading or anything like that. I mean, I would probably argue that the more monitors you have, the higher the likelihood goes that you're going to suffer from, a paralysis by analysis. And I'm not saying that you can't trade. So if you have 8 monitors, I'm not sitting here saying that you're not a good trader or anything like that. I just think it's something that's talked about too much. People focus way too much attention on it, and it's just quite frankly overrated. Ches, what are your thoughts on, and by the way, for you new listeners out there, Ches is our esteemed co-host here, but what do you think on monitors? I mean, any thoughts or opinions? Or, I know you have quite a few, but I think we're kind of on the same page in regards to this.
Yeah, and I think it's a common misconception, and I thought the same thing, that, I want to be a trader, therefore I need to have this wall of monitors, and just because that's what I've seen, other professional traders have. So here's the thing, though, as a new trader. Most people think that with the addition of more monitors, I'm going to be a better trader, and that couldn't be further from the truth. In fact, especially if you're new and starting out, you don't even have the brain capacity, and this is not a jab at you, to literally take in all of the information on all of those monitors. Remember, your eyes can only focus on really one at a time. 2, I'm in complete agreement with you, Clay, that just from a productivity standpoint, and it's not just for trading, 2 monitors is completely, acceptable if you want to have something else up and have some charts on one screen and enter your orders on another screen. But yeah, I actually went from 2 monitors to 4 monitors, recognized that I was only using 2 of those monitors anyways to trade, and the other 2 were just from kind of productivity stuff for, working from home or doing whatever else I wanted on the side. But now I actually have 2 monitors and then a 4K TV. And to be honest with you, the 4K TV is the equivalent of 4 monitors. So I actually have 6 monitors, essentially, that what people are used to. Here's the thing, though. I don't actually use all the space on the 4K monitor. So I almost bought something too large that I don't even use all the way. But yeah, 2 monitors would definitely help you out. It's easier than 1 monitor, just so you can have maybe charts on one screen and order entry on the other. But yes, it will not make you a better trader, and I promise you that from experience.
Yeah, it's a hot topic out there, and rightfully so. It's because let's shoot straight here. It looks pretty cool. You look at some of these pictures, and you're like, whoa, I want my trading desk to look like that. And yeah, aesthetically, it's great, but doesn't really make a difference. You just heard Ches and I's opinion, so we'll move on from that. Today we have a guest, obviously, and he goes by HeyFordy in the chat room. His name is Mike, though. He's from Rhode Island, as we discovered, and this was not that any other interviews aren't fun or whatever, but he's got a lot of energy. There was quite a bit of backstory here, which we'll hit on right away in terms of just getting this interview to happen. And if you stick around long enough to the end, things get a little weird. So, but Ches and I and Mike, we all had a good time, and he was fun. He's enthusiastic, and he's got a good, crazy journey. He's got a good outlook on things. And towards the end of it, it makes sense why he really enjoys the mental part and why his kind of perspective on things is the way it is, because his kind of quote side job is not quite the norm. And I don't want to offer any spoilers, so I'll just leave it at that. But definitely a fun one and an enthusiastic one, and one filled with energy and a little bit of weirdness. But hey, weirdness, that's just weirdness is fun once in a while. So without further ado, let's hear from HeyFordy, aka Mike. Mike, welcome to the show.
Thank you for having me, guys.
And wow, we've been on quite a journey behind the scenes here. It all started yesterday. We tried to do this, and I have to tell this story again just because it made me laugh, and we were all laughing about it. But there were some technical difficulties. But Mike, again, he goes by HeyFordy in the chat room. He's a team player. I don't know any other way to put it. And he was like, you know what, fellas, I'm going to make this happen. My internet's out at home. I'll go to Dunkin' Donuts. And we're all thinking, all right, Dunkin' Donuts, that's probably not going to work out because, you got people in the background and all we're going to hear is, hey, I'll take a sprinkled donut. But he said, no, I'll be in the parking lot. So the mic had some issues. And, we were like, okay, no, that sounds good. And he's like, all right, well, I'm kind of like making out with the mic right now. And we're like, well, that's just what it's have to be. So there was Mike yesterday sitting in the parking lot of Dunkin' Donuts, having people give him a weird look as he was sitting there on his laptop, making out with the mic, trying to do this interview. But then the internet, what did you say, Ches? They throttled him or something? What was your diagnosis of the situation?
Yeah, I said unless he buys a donut every 10 minutes, they're going to cut his internet out.
Hey, that's probably it. It.
So he wasn't meeting the quota, and they had to cut off the I don't know what happened, but it was a failed attempt yesterday. So here we are today. So a public thank you, Mike, for just working with us to get this done. And that's there's a lot of behind the scenes stuff that happens here, and it's got to be within at least the top 3 funny stories we've had, because I can just envision Mike sitting in the parking lot getting all these weird looks and people probably offering him donuts because I felt bad for him. But here we are, so let's get to it. What got you interested in the market? How did you first learn about it? And then we'll kind of just take things from there.
All right, so what kind of got me started was a buddy of mine that I started working with. He had a Robinhood account, and he started telling me about it. And I knew about stocks because I have like a Roth IRA set up and a couple other accounts through Morgan Stanley. But anyways, so he showed me the app. It looked pretty simple. I enjoyed the setup. And, it was pretty straightforward, pretty basic. And basically, I just downloaded it, funded the account, and just dove in. Didn't really have any, education. Didn't have really any clue what I was doing other than clicking a couple buttons. And then, I just started trading and kind of was trying to do the learn as I go scenario.
Yeah, the good old learn as you go scenario that many of us try to go down, including myself. But, I want to, it's interesting because Robinhood makes it so easy for kind of people to get into the market. And by no means is that a bad thing, but I always say that it's a double-edged sword. Sometimes it might be actually too easy for people to get in and not really understand what they're getting themselves into, or, how to kind of pick stocks especially. So I'm going to assume that based on kind of your limited knowledge at this time, were you just going to start trading names that you kind of knew, like, I don't know, Apple's or Ford or AT&T or something like that? Or, what was your criteria for finding where you're going to put your money?
So actually, no, I didn't invest in a single company I knew the name of. I just had this buddy that was doing the Robinhood, and I was kind of playing off of his picks. And a couple of those picks, to start off, was NETE and also SKLN, I think Skyline Medical. And they were basically like, dirt cheap penny stocks. I think they were at that time around 20 cents a share. And I just kind of was just listening to him and trying to, I thought, hey, I'll listen to him for a little bit, follow his picks, get the, the hang of it, and then take the reins.
Why? Why did this person have your trust? Because he was a friend, or was he like is he like a stockbroker or something? But why the heck were you trusting this guy and just following him?
He is a friend, but the main reason I was taking his calls and listening to him is because I didn't know any better. To be pretty simple about it, I had no idea. I was like, he's doing it. He has more experience than me. Let's jump on the bandwagon and just follow this guy.
Okay, that makes sense. Okay, so he had been doing it, therefore in your mind he has experience, therefore he'd be a smart person to listen to. And so I'll buy that logic of sequence. But as Ches and I always say, the one tricky part about the markets is logical things, many instances, are just not how the market works, because logic doesn't always hold true. And, I think that's a good example of that, because hey, somebody's got experience in something, therefore I will listen to them. Well, experience doesn't necessarily mean it's any sort of good experience. And I remember both those ticker symbols very well. And yeah, they were, you guys were kind of scraping the bottom of the barrel with those. So, how did this, well, actually, let me take a step back, because, was there any hesitation at all? Some people we've interviewed, they're doing research, they're trying to figure out how this works, how that works, but it sounds like you were just like, oh, Robinhood? Oh, that's cool. Okay, let's go. Was there any hesitation at all, or did you just literally jump right in?
There was some hesitation, but not too much. I worked with him in a restaurant. I'm a bartender, so we get cash nightly. So I was just like, one night, we made $300, and I was like, hey, let's throw this $300 in it and see where it goes. And I've always had this this state of mind where, like, let's not work the 9 to 5. Let's make as much money as we can, and let's try to like make our money into more money. So for me, it was an opportunity to just see what it was about. And again, I put in like $350, so I didn't think the risk was too much. But yeah, I just said let's go for it, pretty much.
So now you're following your guru friend. Did you guys already make did you make $1 million now, and that's why we've had so much problem? Were you actually at the Dunkin' Donuts on the island that you own when your internet went out, or what's the ultimate story here? Because obviously something had to change before you kind of landed here.
So actually, yes, we were on an island when this happened. We were on Jamestown Island, Rhode Island. But
well played.
That was well played. That was well played.
Yeah, but no, we were just I don't know. We bought the shares, and of course, the next week, it went down a couple of cents. And when it's 20 cents a share, that couple of cents is quite the percentage. So I held. I just was like, yeah, I don't really have any reason to sell right now. I probably didn't know how to sell at that point. And I was like, let's hold. And me and my buddy, his name's Jeff, by the way, we're like, yeah, we're just hold to the ER. It'll spike before the ER, and then we'll just get rid of it. And it did, kind of. I probably sold it after holding for 2.5 months for maybe like 2-cent profit. I think it was in March when I sold it. But yeah, that was it.
So, because I always like to try to dig into the anatomy, how are bad habits formed? So was your impression, and if it wasn't, that's fine, you can say, no, you're wrong, but was your impression at that point is, okay, this is how the market works. You buy something, and then you just wait, because it will come back up. Sure, I had to wait 2.5 months to make, just 2 cents, but you know what? I held, and it came back up. Is that kind of the lesson that you learned there? Is that kind of what you started to conclude about how the market worked, and, impressions that you were, getting about the understanding of how, all the dynamics come together?
Absolutely. I had no idea about anything, but I just figured, like, hey, let's buy it. This company sounds great. It's definitely going to do eventually, do good eventually. So, so it's basically like buy it and wait for that eventually to happen,
So, and because in your mind the eventually did happen, you thought, hey, that's how it works, is you think that something will eventually happen, and when it does happen, you're going to make money. And that was kind of your first impressions, like I said, and that's really kind of how bad habits start. And that's always risky when, I love how you said, I don't even know how to sell at that point in time. Clearly you figured it out, but the point here being, when you're brand new and you just jump right in, you may be making money, and it all goes back to a video that we have, all wins are not created equal. Because if your win is just totally random, which I think it sounds fair to say it was just totally random, it's not going to quite work out in the long run. Now, was this SKLN or is this NETE that you were talking about?
This was NETE.
Okay, so talk about SKLN. How did that trade turn out?
That one, I don't remember exactly how much I lost or when I sold, but I did end up selling that one for a loss. It just went down and down and down. And I think when it was going down, I was very eager, and I was starting to just buy and sell really quickly. So I just got rid of it, and I was like, oh, all right, on to the next. And so I just kind of cut that loss, and then I started, buying other stuff. And I got lucky again when I started buying the other stuff. Like, I hit fool's gold a crazy amount of times in the beginning of summer, from like May to end of July. I even remember the tickers. But yeah, it was just it's for SKLN. It was just it was a dud.
Okay, so talk to us about this Fool's Gold. What tickers were you playing, and how were you doing on these? And just I guess walk us through. So we'll go through the formation of Fool's Gold, and this should get pretty interesting.
All right, so after talking to my buddy for a little bit, I knew he had a little more experience, but not much more. So I started going, and looking for free education online through YouTube videos, and then I started going through Facebook for stock pages. And I came across this one stock page, and they had a Facebook chat where they had, a group of guys, traders, and they'd shoot out, a couple calls here and there, and actually, tell you something about the stock and how the market worked. And that was a good move on my part. I'm actually still in the group. The group's great, and that was a good, learning advantage. But so when I was in this chat room, they started putting out these different calls for different tickers, and I would see the call, I'd see when they got in it, and I would just buy. And some of the tickers that I was buying and doing really well was OPTT, KONE, KOOL. My first one, MGT, that was in March. That was my first fool's goal, and that's when I was like, I have everything figured out. This is awesome. I love the stock market. This is easy. Why didn't I figure this out sooner? And basically, I grew a small account by the thousands very quickly, just off of luck and these quick trades. And I just thought I had everything figured out.
Well, and that's like I said, that's not uncommon at all, especially when things are going your way. But I got to ask the obvious question here: was there a moment in time where you got your face completely ripped off on a trade and then realized, oh, maybe I don't have everything figured out? Or did you actually just kind of keep snowballing this money and recognize that, hey, there's more to this? Because most of the time people kind of get their faces ripped off on one bad trade and lose kind of all of those lucky gains. So, what ended up happening with you?
Well, basically, because I had this great sense of just confidence / ignorance, I started buying anything that I saw get called. And basically what happened is I was doing it so much that I found out what the PDT was, the pattern day trader rule. And I found this out because the call was made in a chat. I went in, bought it, and then I went to go sell for a profit. It was like a $600 profit. And then it started dropping, and I couldn't sell. And it said, pattern day trader, you can't sell. And I was like, well, what's going on? And it kept dropping and dropping and dropping. And then I started losing, $1,000, $1,500 on this one trade. And I just waited till the next day and sold it. And I didn't know what PDT, I didn't understand it. So the next day when I sold that one, I jumped into another call. That call went up, tried to sell it, couldn't sell it because I was still within the 5-day trading. Then it started going down again. Next day, sold that one for another $1,200 loss. And this happened a good 4 or 5 times from where I brought my account that I was up an incredible amount to being down past below with the money I put in. I was back in the red. And that was definitely by August, September of this year. And I was like, whoa, like there's something up. I gotta stop just listening to people send out these blind calls. Whether they know what they're doing or not, I gotta listen to myself, and I gotta figure it out for myself and learn for myself, and start judging what actions I should take, what I should buy, where I should sell, when I should do it, and so on and so forth. And I got really beat up in the end of the summer. It was bad.
Were you getting beat up all because of that pattern day trading rule, or did some of these quote unquote picks that you were following, did some of them just not work out in your way, or was all this beating up caused because of the pattern day trading rule?
No, it wasn't. After the initial me figuring out what PDT was, it wasn't that beat me up. What beat me up is I just didn't know what I was doing, and I was going on stock tweets, whatever it's called, and just going off something that was talked about a lot. I'd be like,
you're puppet trading is what you were doing.
Yeah, man. Absolutely, I was a sock puppet. Absolutely, man. It was horrible. Someone said buy, I bought, and that's how it kept going. And I was trying to learn, but you can only get so much off of YouTube or asking through a Facebook chat. You can only get so much of an understanding. So,
well, I want to make a point here, just because for a while it sounded like, wow, all this guy was doing was following other people's picks, and he kept making money, and then he lost money, but it wasn't because of the picks. It was because, the pattern day trading rule, he didn't quite understand it. But thank you for, expanding more on that. Puppet trading, which he just sock puppet trading, he admitted to being a sock puppet. Well played again. Yeah, it may work. Nobody can sit here and say that, hey, picks never work. Yeah, sure, picks are going to work, here and there, heck, maybe multiple times in a row. But, as Mike is saying, when you don't know what you're doing, that's only going to last so long. And you're going to get, in his words, beat up. And it's not going to be a pleasant experience. So if you're one of these people that maybe is getting like text alerts, or you're just basically scanning the internet and looking for people to tell you when to buy, and it's working for you right now, hey, I'm happy for you. But please just consider that if it's too good to be true, because to me, that's way too good to be true, that all you have to do is like listen to other people, buy, and then you're growing your account at rapid rates. If it's too good to be true, you know the rest of that saying. So you start to get beat up hopping back into to the story here. And why do you say you just couldn't get it all off of YouTube? I mean, is it because there was so much information, or what was giving you that whole feeling that, YouTube, you just didn't sound like you had that much confidence in it after a while?
Well, when I would type something into YouTube, like say I was searching to figure out, how to read a certain type of chart or what this meant, it was very like jumbled up. The information was jumbled up. I'm not saying that was incorrect, but the way you looked at it, I looked at it and tried to read up on it. One person would say this and one person would say this, or it'd be a little bit out of order on how you're supposed to take in the information, and it got confusing and very overwhelming. And I couldn't really grasp everything I needed to grasp. I thought I knew something, but I really just felt overwhelmed and frustrated because it's a lot. It's a lot to take in,
And Clay and I stress this all the time too, in almost every podcast, is that there is a ton of great information out there. There's no doubt about that. And in fact, the only problem with all the information out there is most of the time, just like Mike has experienced, it is not in a logical, structured manner. It can jump from, somebody who's been trading 10 years and assumes you understand all of the basics and kind of fundamental principles, to the next video you go to is this guy who's explaining, what a bid and ask is, which is very, very basic. And it's just not put in a logical way, kind of step by step, to kind of help you progress. Like I said, there's tons of information out there from tons of good people and also tons of bad people, so you got to be really skeptical about who you learn from who at the same time. But yeah, the lack of order can drive you to the feeling just like Mike had it, and he just says, it's overwhelming. So you kind of realize, obviously, now that this content or this kind of training you want to get free from Google or YouTube or StockTwits or whatever it is, isn't kind of put together in a manner that's good for learning. So did you decide to go look for some teachers, or what kind of is the next step in the process for you, because you realize that you're not going to really be able to put together all this information just with the random tidbits you're finding?
So I did start looking for different, I guess, leads, or like educational kind of ways to go about things. And again, it kind of touched back into what Clay was saying of developing bad habits. I had the habit of listening to people make calls and following them. So I started seeing service for, alert services and calls. And I subscribed to one. It was about like $40-$50 a month, something like that. And it was like, hey, we're going to send you a pick at 3:30 before the market closes. Buy, this pick, sell it at opening tomorrow. You'll make money, and we'll just keep rolling it into the next trade, and you're going to increase your account size by like 4,000% in like the first month. And I tried that. It didn't work.
It didn't? That didn't work? Oh, no, my God. Chaz, are you shocked? Are you as shocked as I am?
Yeah.
Not shocked at all.
Yeah. So believe it or not.
Man, I need a sprinkled donut right about now.
So then I went for more of like the educational way, and I was like, all right, I gotta figure this. I gotta stop this guessing game and this like follow the leader game, and just really just do it for myself, And so I did find another teacher. It wasn't you yet, Clay. It was I don't know if we're allowed to say names, but it was the flashy teacher that says everything's Ferraris and all that good stuff.
Selling the guy that sells the dream. Got it.
Ferraris, yes. Hot girls, Italy's, yeah, you name it.
Yeah. So my buddy had a couple videos that he let me watch that were, by the way, very expensive. But yeah, so I started watching these videos and listening to it, and it was just so much bullshit. I don't know if I could say that. So much BS.
That's fine.
Sorry, but it was just like,
especially when you compare it to the price. Is that what you're saying? Is that what made it such BS? Was when you think about what the price actually was associated with it?
It was like panhandling for gold. Like, you got to go through a ton of dirt to get a speck of gold out of the information. It was just him talking 90% about himself, and then once in a while you might get like a useful little tip or something. But it was just ridiculous. The length of the videos compared to the amount of information you got out of it was just not worth it. And so anyways, I listened to a couple more of those, and then I was just like, I was better with YouTube. So
love it.
Yeah, it's probably good you didn't mention the name. That way we don't have to worry about this person coming at us or anything like that. So yeah, that's
slander.
Yeah, slander. Yeah, he said my product was panhandling for gold. That was a great analogy, Ches. I mean, that'll definitely have to be a quote. But You felt like he was panhandling for gold. So yeah, well played.
So anyways, I went back onto the internet, started looking again, and I did see you in a few of the your videos you'd post on certain stocks, and I noticed that it wasn't very, how do I say it? It wasn't like, you basically just said what was going on with the stock at the moment. You had it black and white. You didn't try to say hey, this is a possibility of it going here, or you're going to make a ton of money if you buy there. It was just kind of like, hey, if it's in this zone, it'll be bullish, bearish, whatever. And I kind of picked up on the non-salesman type of vibe you were giving off, and I was like, you know what? This guy kind of seems like he's not just trying to sell me on his service, more just like, hey, like, this is better for you to, really know what you're doing and further your education. So I started checking you out slowly, because I was skeptical from past experiences. And I first found your website, surfed around a little bit, looked up reviews on you, just kind of was, feeling you out a little bit. And then I started off with, just like the inner circle, and I watched for a little bit. I didn't really jump into chats. I just watched and just was, basically trying to figure out what you guys are about.
How long did you watch? Because I still remember when HeyFordy all of a sudden popped up. Hey, who's this guy with a little avatar of the boxing guy or whatever? So I mean, so how long did you actually observe before you finally started talking?
Probably I'd say a couple weeks. I'd say probably, I think I signed up in October. I probably didn't really jump on until the end of October. I know you guys had, a structured chat room, and I didn't want to just jump in and be like, oh, look at this new guy, causing a ruckus. So I kind of just watched a little bit. And I still did jump in at one time and did cause, not a ruckus, but, I was informed on how I should type in the chat room. But yeah, so I did wait a couple weeks.
And yeah, that's and we generally recommend that, especially for people who are new to kind of the community. We always say, we want you to introduce yourself. We want you to be an active member, but take some time to actually, just observe how the room works, because this room is drastically different than, Facebook groups and other communities, in the sense that Clay really runs a tight ship, specifically in the sense of we want no nonsense, just technical alerts, and just like, Clay's chart analysis videos. We just want to kind of give you zones, and we're not here to give you calls for it's going up or it's going down. We can definitely teach you how to kind of identify high probability setups and such like that. But in the end, just like you said before, you're the one who has to pull the trigger. Your risk preferences, and if you make it in a logical way, you can certainly make money in the long run. So you observe. I'm sure you got berated a little bit, if you made a bad alert or something like that. But obviously you stuck around. So what's the next step for you here?
Well, I just want to touch back and be like, when I was saying before, I had the bad habit of following calls and listening to people say buy this, buy that. I actually really like that about the chat room, that you guys did not allow that. You guys allowed, like technical spots to be called out and like that and things like that. But I noticed that and I was like, this is actually good for me because I won't be tempted to be like, buy this because this person's ranting about it. It sounds like the best thing in the world. So I actually really did like that, how it was structured, and you guys, we just made very non-biased calls, just stay in the facts more or less. And I did really like that. But anyways, so yeah, I did go on to do a couple more trades, going by pretty much my same rule of thumb. And again, I got burned. I forget the ticker, but I got burned pretty bad, and I was like, all right, Mike. So I'm messing around.
Let me ask this real quick, because I want to circle back to the point that you had made about bad habits. Was this going back to your kind of trading as normal, as you essentially said? Was this the bad habit of just following other people, or was this something else that was causing these bad trades?
No, the bad trades just went back to my my lack of knowledge and just being like, oh well, this sounds good, and just buy it. It was
okay. So you were still essentially puppet trading other people then at that point. At the core, that's what you were still doing. That snarky little annoying bad habit of following others.
Yeah, it was a bad habit. It was part laziness, and not wanting to put the time in to sit down and really, figure it out. But yeah, it was just reckless trading, at its finest. And sometimes
right.
It worked out, and sometimes it didn't. So.
And that's got inconsistency written all over it. When sometimes it works, sometimes it doesn't. Assuming, of course, you don't have any RVR in place. When you have RVR in place, then randomness doesn't quite become random anymore. But so at what point, I mean, we've established that you're in the community, you're still making trades. All right, some work, some don't. So when does it finally kind of the light bulb go off? You kind of grab yourself by the collar, shake yourself a little bit, and say, hey, HeyFordy, there we go. You got to shape up here. When did that happen? Was it a specific trade? Walk us through that kind of point in your journey.
Yeah, I can't remember the specific trade or trades, but I started getting, having a rough time and losing money again. And I was just really frustrated, and I took a step back, and I was like, maybe I just need to stop trading for a little bit and just figure out what I'm doing. Stop this guessing game, stop this whole, feeling of uncertainty, and just, let's get a better handle on things, and let's do it right. If we're going to do it, let's do it right. So then I went and did the first course of robotic trading, and it was eye-opening. Very, very much. That's the best way I can say it, is eye-opening. A lot of the uncertainty went out the window, and I started seeing things in a logical way. Support and resistance levels, trends, things like that. And I watched every video. And then I only bought the course. I didn't go through CTU at this point. So I watched all the videos, and then I watched them again. And I was just trying to absorb everything I could. And I started taking this into, my way of trading, my trading strategy. And I noticed the improvement. Not to say that I went to 100%, accuracy of being right, time in and time out. But there was a feeling of confidence in the trade when I would make a trade, and I would know that I didn't do it just because someone said, hey, this is a good trade, and that was my only reason. I knew why I entered in at this price and why I sold at this price and why my stop loss could hit this price. So I
got to pause there because I'm going to snap in a good type of way. As a listener, you are doing it wrong if you buy into something and then you sit back and say, I don't know why I did that. I don't know what to do right now. So I love how you said I was buying, and then I actually knew why I was buying. I knew what to be looking for. That's as basic as it sounds, and I fully realize as a listener, if you've never traded, you may be thinking, thank you, Captain Obvious, move on. But I promise there are so many people out there. And Ches, I want you to follow up on this because you do deal with a lot on the customer service issue, that people are literally, they don't know why they buy. They literally don't know why they buy, and then they get a hold of us, and Mike, good job. Good job. And I realize that it may seem like such a basic feeling, but Ches, again, follow up on, the people that you deal with in chat room. But isn't it a good feeling when you actually know why you bought and then know what to look for and kind of the quote unquote story makes sense?
Yeah, and obviously the great thing is that I love that Mike realized it was eye-opening. It's almost like he's looking at the market in a whole different way now. And honestly, Clay, that's just from how you produce the courses, and they're very repetitive, but at the same time they hammer on what's important and what's not. So a lot of people on the customer service side, I deal with people who are like, well, I got in this position, it's gone completely wrong. What do I do? And my response first off is, well, what was your plan when you entered? And just like we all kind of established already, there was no plan. People were talking about it. It's really hot, and I want to make money with these people. We all want to make money and get rich, and that's not a logical entry. You need a technical reason to kind of get in a trade, and most of the time people are just entering on hype, and it's not uncommon at all, especially with all kind of StockTwits, Twitter, iHub, any of these kind of Yahoo Finance, wherever people kind of congregate. It's just like this group herd mentality, and generally it doesn't do you any good, which is unfortunate. So once you kind of take the randomness and build it into kind of a strategy and a system, and you can look at logical places to buy or sell, and especially place your stop loss and manage your risk. It just takes trading from kind of this hopeless throwing darts at a board to a system, and ultimately what we all want to do is turn it into a business, and businesses need to generate kind of consistent money. So I love that he said it was eye-opening, because that's such a powerful thing.
Yeah, and so sorry to cut you off, Mike, but that was beautiful. You actually understood why you're doing what you're doing, and just to end it right here again. If your why on why you entered a trade is because a bunch of people on StockTwits or iHub or Twitter or Facebook were saying to enter in, you're not trading. That's just gambling. At the end of the day, it's gambling. So awesome. Thank you for sharing that, and thank you for sending me off on that tangent. So anyways, back to your story. You've established you feel good about yourself because you actually understand why you're trading. So pick it up from there.
Yeah, so I started understanding, exactly what you're saying, like how to trade and where to enter, instead of just entering because at that point in time, I'd read like a tweet that said, hey, this is going to be a good buy, and then I just buy. I start to see, support levels and resistance levels, and all right, it just broke this resistance. Now it's probably going to run to this, so, buy here, and then I'll sell right before the next resistance level. So I started getting kind of a system down, and I wasn't only just trying to have winning trades like I did in the past, where it was buy because I heard it, and then just let it run as far as it can go, and hopefully make a home run. You know what I mean? Instead, I just started doing these small but steady, slow, profitable trades, and just started to kind of get into like a rhythm. It was smooth. It was there's always a hiccup here and there, especially these last 2 days, but it was just smooth, and I started seeing it. And so after I started knowing this, and I started feeling this about my trades, I was like, we gotta get another course. Like I gotta keep this going. Like education doesn't just stop right here. I knew the market was always changing, and there was a lot more levels to it. So I was like, all right, let's go on to the next level. And then I started going through a couple more. I went to RT, the advanced training one. And I did level 2. Level 2, I definitely got to go back over. I had a little bit of problems absorbing that one just because and I felt it. Level 2 was a little boring for me trying to absorb it, but I'll go back over that one.
Are you doing penny stocks?
I do anything under $30 usually.
Okay.
I don't do any
because that's really level 2s is probably 80% for penny stock players. Yeah, there's some stuff going on for big board traders and stuff like that, but if you're going to be in the world of penny stocks, then yeah, that's the level. So I can understand why that course was kind of whatever, because it's not really a must-have tool if you're trading stocks, that aren't 001 or 0007 or something like that.
Yeah, no, I definitely did get like some good things out of it. I didn't absorb it as much as some of the other courses. But I don't trade OTC, but I do trade some things that are 5 or below. So it's
small
still
cap.
Yeah,
right,
exactly.
Yep.
So it still definitely does, help me. But that was just one that I had a little trouble with. But then RVR was awesome. That was another huge course I really enjoyed, really absorbed it, and I really put it into action in each one of my trades. Definitely made a huge difference. Very, very happy with that one.
I'm curious of this from somebody that you like to follow, or you formerly like to follow, did you find yourself as you were going through and learning, you'd look at somebody and they'd be saying, oh, buy this, it's hot. And then you went and looked at your chart and applied your knowledge. Did you find instances where you're like, what are you talking about? Like, that would be like the worst spot to buy.
All the time. Yes, absolutely. And I'll see those, like, yeah, and some of these people, they're somewhat friends, like I said in that Facebook chat, and I'll see this and I'm like, I'll comment back and be like, I hear what you're saying, but you might be able to, find it at this price, closer to this level. And, sure enough, that would happen. And they would hit me back. They were like, good call. good call. It did touch that. And I was like, yeah, well, just kind of was reading the chart. So and that was it. But yeah, absolutely. Right now, I really don't listen to anyone. I've learned the hard way, listening to people. You might get, a good call here and there, but overall, you just got to know for yourself. And even if it is a good trade, you got to know where to enter and where not to, So
you take it from a haphazard, entering on hype to, hey, this is, an established level of support. And, now that you've gone through RVR, you can recognize that, hey, I can keep my risk very low in relative to the possible payout. So, but yeah, RVR is what I always kind of preach to people, and I always kind of mention. We have a lot of people who say, hey, I want to get out of penny stocks after watching your kind of options on steroids video, and the thing I always have to mention to them is, have you studied risk? Because if you have no concept of risk, and that this applies to stocks, options, forex, futures, whatever it is, the only thing we can control as traders is risk. And if we can keep that risk at a whatever the logical minimum is, that just leaves your your upside completely. It could be infinite, essentially. The whole thing we want to do is let the chart essentially do what it's going to do until it's time for us to exit, and we have various ways of managing that. And a lot of people thought, when the course launched that, it's just about how to find logical stop loss levels. I can tell you from experience now of 3 years, one of the hardest things to do as a trader is manage a winning trade. And most people will probably think, well, what do you mean? Everything's sunshine and roses when the trade's going your way. This is completely wrong, and most people actually overstay their welcome in trades. And, logically taking out as much as you can from a trade and then knowing when the chart is possibly turning on you, it's a very, very hard thing to grasp. And yeah, so I'm hoping that was also kind of some eye-openers for you.
Oh, yeah, absolutely. And, I love that, like the 1 for 3 little calculator that the RVR includes. That I do with every trade. Always obeying my stops. That's a huge thing with me. At first, I did have a little bit of trouble. I tried doing mental stops, and
you're not the first person, and they didn't work out very well for you, did they?
No. You get burned a couple times, and you're like, just plan the trade the plan, all that good stuff. You just gotta stick with what you know. You gotta stick to the plan. It's a plan for a reason. And it worked. Actually, now that I think about it, the only time recently that I have a stop loss in effect, like a hard stop, and it didn't go through, and now I'm having a little bit of problems, is currently right now. It's LEI that just had a name transfer to CEI, and I did have a stop loss set in that at 119, and then my shares were frozen because of the name transfer. And I guess the stop loss didn't transfer with the name, so it dropped in price. I think I'm down about 12% on a somewhat large, position. And right now, I'm not really sure what to do with it because it's well below my stop. Not sure if I should just cut it and keep going, or average down and hold until next week, or so.
It's well below your what?
My stop loss that I had set. I think
Where's that relative to your stop loss?
It's at 109 and his stop was 119.
Yeah.
So, but where is it at relative to your stop loss?
The stop loss is at 119.
Is it below it?
Yeah, it's 10 cents below.
And what do you want to do at your stop loss when your stop loss is hit?
Well, if it was still in effect and the name change in effect, I would have been out already.
No, I'm trying to answer your question. You don't know what to do with it. You know what to do with it. I'm trying to get you to admit. So you had a stop loss at one point, and what is a stop loss telling you want to do within a trade plan?
It's time to get out.
And where is it at right now relative to your stop loss?
It's well beyond the get out point.
I think you just answered your own question. Chalk it up as a learning example that Yeah, that's a pretty crappy. That sucks that it didn't transfer over with it. But I guess you have to chalk this one. But last thing you want to do is try to get fancy with it. And in fact, that brings up. We'll link this in the show notes. This happened, I don't know, about a year and a half ago or whatever. But I tried to get fancy with something, and then I lost like $3,600 on one trade because I wanted to get fancy. I wanted to try to wiggle myself out of it. And you're on the edge there of, maybe I should try to buy more. And you know what? You could buy more and you could get yourself out of it. You never know. But let's go back to the habits. That's just not a good habit to get in. If something violates your plan, which it already has, then get out. Your plan was never to get fancy with anything. It was to get out when it was, hit your stop loss, and now it's below it. So would you agree with that, Ches? That sounds like a pretty logical thing, right?
Yeah, and obviously this is a very unique situation in the sense of the name change, and like Clay says, that honestly just sucks, but at the same time, just chalk it up, close it out, because if you start getting fancy with it, you have no idea if this is going to go from 109, 110 down to 10 cents, and that loss that is obviously more than you wanted could snowball into this uncontrollable loss where most of your account is gone now. So I would just chalk it up. It's a crappy situation. I'd venture to say it doesn't happen often, and the hard thing is that you did the right thing by putting in a hard stop loss. It just didn't, essentially trigger for those various reasons. But yeah, I would just chalk it up, move along, don't lose more money or lose more sleep or more time on it. Just kind of wiggle your way out, because it can cost you, as Clay said.
And it's already costing you right now via the time value of money, right? I mean, your money is stuck in this trade right now, not doing anything for you. Whereas if you just accept it, get the money, you can put that money back to work and, start to recoup those losses in and of itself. So from a time value of money perspective, I mean, your hands are tied behind your back. So, but yeah, that does suck. But I guess that'll be a good battle scar that you can pass along to future traders of, hey, make sure of this because this happened to me one time. But definitely don't get yourself in a situation where something spins out of control because you know what you're doing. And like Jess said, you had the hard stop in, so. Just follow the trade plan, as crappy as it may be. Well, I'm looking at the time right now, and I don't know where it's gone. So we're definitely going to have you back at another point. But let's hit up a few more questions here. Where do you stand right now with trading? Are you trading just stocks? Are you trading options or Forex? What's kind of your bread and butter at this point?
Right now, I'm just trading stocks. I have a couple accounts open, one using for a small account for day trading, and I'm mostly just focusing on swing trading stocks below $30 through a Robinhood account, which actually my Robinhood account I got shut down for 90 days for PDT. So it is forcing me into it, and I like swing trading a lot better. I like being able to hedge my positions and manage them pretty well over a little bit of an extended time rather than day trading personally.
That's super interesting because last week, sorry to cut you off, but last week we had somebody that wasn't a huge fan of swing trading stocks. And in that episode, we talked about, it's all different from person to person to person. And here we are this week, and I promise none of this was planned. Here Mike is saying, hey, I like swing trading for the reasons that he did. So that's why there is no one-size-fits-all strategy. Sorry to cut you off there, Chaz.
Oh, no, it's fine, and it's totally true. And that's why alert services and, following somebody blindly doesn't work, because everybody has their own preferences. Everyone has to find where they specifically fit in the market, and it's all about essentially a comfort level. Mike is totally comfortable and enjoys swing trading more, as I do as well. At the same time, there's people who can't stand it at all. They go, the overnight risk and all that stuff. And there is no one right way to trade the market. There's many hundreds of thousands of ways that you can make money in the market, and it's all about finding what jives best with you. But Mike, what exactly do you have on your charts for these swing trades? What indicators or moving averages, or what does your chart look like?
So through TOS Thinkorswim, I have couple of different study filters set up. I'll have one just to kind of look for patterns, and it's basic, 11-day, 50-day, and 200-day SMAs, and RSI volume and MACD. And then on my other one, and this one's more for day trading, I have my Bollinger Band set up, MACD as well, my CFI, and RSI as well, and volume. But so I'm not using too much, but I have my different filters set up for different time frames on trades.
What is a CFI?
A cash money flow. Cash flow index. Sorry.
MFI, you meant MFI, money flow index.
Yeah, sorry. That's dyslecticness kicking in.
Hey, that's fine. I thought maybe you invented a new indicator that was the Holy Grail. So, I mean, Ches and I, we're still searching for a Holy Grail. So I was going to say, hey, hook me up there, Mike. But all right, no, that makes sense. What about routines? I mean, do you do any sort of like nightly prep the day before? Do you wake up extra early? Walk us through kind of your routines and rituals on how you approach, trading the market, on a routine basis.
So I'm pretty into it all day, all night. I'm borderline addictive, but I'm always looking for. I'm looking through AKs. I'm trying to learn how to read a lot of filings to better. But I'm just constantly looking for new news charts. I scan finviz.com all the time. Always looking for patterns. It's just nonstop for me. Right now it's wintertime, and wintertime in Rhode Island is very slow to be a bartender. So I have no work at all this month. So all day and night, I'll wake up 7:30, 8 o'clock, do my little morning routine, and then hit the pre-market, see what's hot. I look through equity feed, for different PR releases, and even if I'm not in trades, like say my funds are tied up, I'm still watching just to kind of see how things unfold, chart after chart after chart. And then usually at night I go through, find big winners, big losers, try to play off those, any ER winners, and just other patterns that I see forming on usually a daily chart. So I'm always looking for something, in a lot of different areas.
Nice. All right, we're gonna spice things up here a little bit, okay, Mike? Are you ready?
I'm ready.
We're gonna do some role playing here. Are you up for some role playing?
Okay.
Okay. Get your mind out of the gutter, folks. Not that type of role playing. All right. So I'm your buddy. Okay. I'm your buddy, and you're just Mike. Are you ready?
I'm ready.
Okay. Hey, Mike. How's it going, man?
We're doing great.
What have you been up to?
Trading.
Trading? Well, you know what? Me too. And in fact, I've been looking around a lot. I've been researching. And I have a hot stock pick for you.
All right, let's hear it.
It is XYZ. So what are you going to do with that?
First thing I do is definitely bring up the chart. Look over the yearly chart, and then I usually break it down to like the smaller time frames, looking for basically what's just happening. What's the SMAs looking like? What's did I see any?
Mike. I'm your buddy, Mike. Just buy it, man. I heard it's hot. My grandma's neighbor said that this thing is gonna melt your face off in a good way. What is all this other? Anyways, right. Mike, if this was person, I would give you a hug, because talk about where you were of just totally following, and then how you would reply to that, which is let me start to do my analysis, and then you totally went through Can you see the progress, Ches? I'm not the only one that's seeing this, right? I mean, from his bad habit to how we would handle a hot stock pick situation now.
Yeah, to just kind of buying it based on, a tip. Now he's going to say, hey, let me do my research and see if there's a trade for me here, instead of just saying, oh, yep, this is good. It comes from a source I enjoy or like, is a friend or a buddy. And yeah, now he's got his process, his system, his strategy, and he knows what he's particularly looking for.
Yeah, that's and I did that, I guess to maybe be a little funny, but to prove a point of, how much you've really come, just because from where you were of self-admittedly, being that sock puppet, to now if somebody were to approach you with a hot stock pick, you're obviously very respectful to me as your friend, but you're not just going to sit there and be like, okay, cool, let me pull out my Robinhood app and buy right now. You had a very specific sequence of analysis that you'd want to go through before you would consider it. And that's what you should do. Ches and I are not sitting here, and Mike's not sitting here saying that hot stock picks are the devil. We're not saying that. We're just saying you just can't blindly follow people's picks. You have to be able to run your own analysis on them, because as Mike was saying earlier, after he learned, he started noticing all the time, holy smokes, that makes no sense to buy right now, where that person is saying, oh, this is such a great pick. So well played, Mike, and your journey has, it's it's very evident here based off of where you were to, how you would approach that role playing. Have you ever role played before? We won't go there, Mike. Never mind.
Let's avoid that one.
We won't go there. But Ches has a time machine, and I'm assuming he's going to let it lend you to you. So, Ches, you can take this next one.
So if I was able to ship this to the island that you're on, what's one piece of advice you would give yourself to, you can pick the time frame, whether it's from when you're trading on hot stock tips or kind of after you started getting educated. What would be the one piece of advice you'd give yourself?
I would go back to probably right after my first trade, and I would just say, slow down, stop listening to other people, make your own calls. You can listen to them, but take it as a grain of salt. Just further your education on it. Know what you're talking about. Know what you're doing. Stop this guessing game. And just, I would basically just tell myself, slow it down. Look at the bigger picture. See what you need to do. Stop trying to look for the quick answer. Just, do it the right way.
I love it. Slow it down. Look at the big picture. That's poetry. I'm actually weeping over here a little bit. That was emotional but it's, in all seriousness, that's the truth. Slow it down. Look at the big picture. Now, if you're just a degenerate gambler, then who cares about the big picture? You just want to have fun, instant gratification right now. But if you want to actually make something of this, then take a chill pill and look at the big picture. Well stated. Now for some fun questions, and you're a fun guy, so I'm curious where this is all going to go. So we'll start at the most important question on the interview. What is your favorite movie?
Ooh, that's a tough one. All right, so I'm going to have to do I'm going to split it down to two. I'm going to do an old school movie and a somewhat newer movie. Old school, I'm going to have to say Goodfellas. I love the movie. It's a classic. I grew up watching it. I love it. It's a classic. I love the little one-liners in it. It always has me going. I could watch it 1,000 times. And now for more of a newer one, I really like that movie Southpaw. And it's just not just because I'm a boxer, but I like that movie because it shows the other side of boxing, which is a lot more the mental stress of it, and it's more of a home base for me than say like Rocky, So.
And I think that goes for just about any sport or profession or anything, is that there's always this side that people don't understand where a lot of the time it's you versus yourself, and there's a lot of things you have to overcome mentally. So I've never seen it, but I can totally kind of attest to that's something a lot of people don't think of. They all just think it's, I'm stronger in the gym than this guy, so therefore I'll be able to beat him. But it's a lot more than that. You'd agree?
Absolutely. Anytime I go into a fight, my biggest opponent is myself, whether it's my nerves and self-doubting myself or just psyching myself out. It's absolutely my number one opponent in trading, in the ring, and in life in general is myself. It's always in my head. It's always a battle.
Yep, that's right. And
I'm ready to tackle somebody right now. You should be a motivational speaker, Mike. Let's go. Ches, put on some pads. We're gonna play football right now. All
right.
Yeah, sorry. That's the adrenaline. That wasn't me. That was my adrenaline. Good speech. But on a side note, I'm into working out and all that stuff. Ches and I, we've established that we try to take halfway decent care of ourselves. And my wife's like, you should get into boxing, and IT Nate, the producer, she's like, yeah, and you should, take Nate. You and Nate should get into boxing. And I'm like, I don't think I could take a punch, but maybe it's going back to what you just.
That's your mental game right there.
Maybe it's just going back to what Mike you just said. Maybe I'm just in my head. Maybe I could take a punch. I play football, so I would think I could take a punch, but I don't know. But
no,
boxing,
you definitely can. That's part of the self-doubt thing, and something that is just new to you and just seems unknown and out of reach, but it's definitely in reach. You guys definitely should do that.
Mike, how did the first punch? How did you deal with taking the first punch? You just got to kind of get it out of the way. Is that just pretty much how it works?
Yeah, the pain comes and goes. I wouldn't even call it too much of a pain unless it's a really bad blow, but it comes and goes pretty quickly. The mental game lasts a lot longer. After what the toughest part about it is not even the punch. So when you get hit really hard and you hear the crowd cheer for the other guy a lot louder, that's way more mentally damaging and hurtful than that punch, or 1,000 more than he could throw,
I can sort of relate to that because I still remember in high school, playing football, like you missed the tackle and you hear the crowd erupt cheering, but unfortunately they're not cheering for you, they're cheering for the other guy because you missed the tackle. So I can kind of, the mental game there is it's probably more of a pride thing, like, oh man,
Yep, it's all the mental game.
Yeah, that's good.
We could go really far with this, and
Chaz, let's just we're going to talk boxing for the next 2 hours, Chaz. Okay. So clear your schedule. We're going to have a follow-up with you and just talk boxing. Be like, this has nothing to do with stock trading. We're just going to talk boxing. But yeah, Chaz, you're up for the next question. Sorry for ranting.
No problem. It's a great rant to have, though. It's very important, and I'm glad people are going to be able to hear about it. But Mike, what would you say is your favorite meal and dessert?
Ooh, jeez. Well, I'm a big foodie, man. This is going to be a tough one. Huh. All right. Let me think. I really like South American food, like a lot of spices. This is a tough one. I'm going to say right up the aisle with like carnitas and like heavily seasoned like skirt steaks. That kind of, heavy spicy food. Just love Spanish food, love Mexican food, Peruvian food, love it. Brazilian, oh God, Brazilian food, Jesus.
So you love food. That's what I'm gathering from all this is you love food.
Oh my God, you have no idea, man. I'm a cook too, but I eat and cook like nothing.
Awesome. Well, we'll get to one more question, then I have a follow-up question. But the final question here, 3 words. What would you use to describe a successful trader using only 3 words?
Only 3 words. Educated. Patient, committed.
Oh, committed, nice. I don't know if we've had that one. We haven't. We've had synonyms, but I don't know if we've had that one. So very well played. So my final question is: if Ches and I came to Rhode Island, would you hang out with us?
Oh yeah, man. You guys in my part of Rhode Island, you guys would love it. It's Narragansett. It's right on the water. We have some of the best beaches around. And it's a lot of fun. Great seafood. I don't know if you guys like seafood.
Oh, yeah. Well, Ches will die, but I like seafood, so.
So you know what'll make me not die, though, and let me at least die with a smile, maybe? If we go and visit you, will you punch Clay in the face? You got to get that first punch out of the way, Clay.
I got to learn how to take. Yeah, you're right. In fact, we may have to do this, and we'll make a video of it. I'll get in the ring, and we can make. This is what we could do. This is what trading is like when you just wander into the market not knowing what you're doing. And I'll be the guy that's wandering into the ring, and then I'll fight Mike, and he'll probably KO me in like 2 seconds and be like, see, that's what happens to new traders when they walk in fighting against actual
And I'll be on the side of the ring saying, XYZ, it's a hot pick,
bye, Clay. Ches, you'll be in your little Speedo doing the round 1 thing, dancing around across the ring.
Yep, that'll be me for sure.
The ring boy.
This is getting weird quickly, so we better. I guess people listening at this point are probably like the diehard fans, so I think we're safe to just take it off the reservation like we were doing. So, but in all seriousness, you're a cool dude. So yeah, we should try to hang out at some point. And the next CT or the next Inner Circle meetup, seriously, try to come. I mean,
it's gonna happen. It's gonna happen.
All right, excellent. So, well. Our time has come to an end here. We'll definitely have to have you back at some point. This was super fun, and we had a good time for sure. So thank you very much for taking time out of your day to hang out.
I appreciate it, man. I was really excited to talk with you guys. It's really been cool to listen to the podcast over the last few months, and now to be able to talk with you guys, it's awesome. It's a good feeling.
Yeah, well, thank you again for all, because you're active in the chat room, so I appreciate that. And we'll definitely be seeing you around a lot more, I'm sure. For all of you listeners out there, a few final things before we part ways. For you listening on the website, click that share button, leave comments down below. Ches and I do read those, and we will reply, and we're always up for feedback. But I mean, the last part when we were getting goofy, I mean, don't judge us too much, okay? We're just having a good time. For those listening on iTunes or any of the other podcast players, subscribe, and that way you can keep up to date on when new episodes are released. And for the iTunes listeners, if you could leave us a rating, and hopefully a good rating, that really does help us out, and Ches and I truly do appreciate that. And then finally, if you're listening on YouTube, check out the channel as a whole, I should say. There's lots of other videos, live trading videos, quick tip videos, variety of things, and so check out the channel, and hopefully you decide to ultimately subscribe. So thank you again to my esteemed co-host Ches. Thank you again to Mike, aka HeyFordy, and thank you again to all you of us listeners. We'll see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.